$600 to $750 million in lending in a year. What tranche of lending, like in lending in particular for this type of business, right? Because you're not a first-time home buyer lender. This is business lending, right? So like, where would an IFC fall in like the spectrum of lenders across the country, like volume-wise, is what I'm trying to understand. Are you guys a boutique lender in Philly, or are you guys considered a bigger size lender because of that business scale?
Yeah, I mean, so we're a bigger size lender, and I think that we
Lending is a thing, bro. It's definitely a thing. You can't be involved in this business and not understand lending.
It's like a backbone.
Yeah, absolutely.
For sure.
It's a critical ingredient to the real estate business.
Yeah.
You can't operate as a business in real estate without understanding to some extent lending.
Right.
And the less that you understand it, the more fucking jammed up you're gonna be. So you gotta wrap your head around the funding aspect. I mean, whether you're gonna do deals cash or like it doesn't
Private money, whatever the case.
Yeah, but you need lending partners.
Right.
Right? Like at some stage, like if you're really doing this shit on a level, you don't just need a lender, you need lending partners.
Yeah.
Right?
That's a key difference. And if you learn how to play that game and build that partnership, that's how you really scale. You know what I mean? You're not tying up too much capital.
If your intent is to scale in this business and you don't have lending partners, you're wasting your time.
Yeah.
You know what I mean? Like if you look at some of the bigger guys that are operating in this business, if you look at they're very, very well entrenched in with their partners. Mm-hmm. It's almost like, I heard a term once that I never forgot, right? It's like if you owed a bank 500 grand, you're in debt. But if you owe the bank 50 million, you own the bank.
I have heard something like that.
And I never forgot that. You know what I mean? Like there's a certain point where the bank becomes a partner because they've scaled with you. I mean, a bank is not going to throw out they're not going to throw 50 million your way.
Right.
Unless they think you know what the fuck you're doing.
Right.
Right?
Proper track record, things like that.
Of course.
Yeah.
It's 50 million. Like, how are they going to explain that to their partners?
Yeah.
That 50 million went out the door to some schmuck in the middle of nowhere that may or may not bring that investment back. That's not going to happen. Right? So they got to, that money has to go to a place where we can reproduce.
Absolutely.
Right?
So speaking on great like lending partners today, joining us for another conversation, man. Very special episode. We have Kevin Whistler from IFC, iFund Cities. I like how that name kind of flows.
Mm-hmm.
I like
Good
that.
Name. Yeah.
This gentleman here, man, he started off as a wholesaler, found himself real estate investing. So he has that background from a real estate perspective mind, so to speak. He's now a regional director, so to speak, in New Jersey. It's like he's the head of overseeing all New Jersey projects for IFC.
Yeah.
Now, I checked your Instagram out. Every quarter, you guys are like doing multiple 7 figures in terms of funding. Is that correct?
Yeah, absolutely. Thanks for having me, guys. I know it's been a long time coming, so pumped to be here.
We're happy to have you.
Yeah, I mean, we're doing, last year we did over 600 million in funding, and this year we're going to be at around 750 million. So
wow.
Just year 6 of the company, which is dope.
Crushing.
So literally, started in 2018 and going into year 7, and 600 to 750 million is great. I think it's a responsible number to be scaling at, and kind of allows us to scale the business and do everything we want to do from a company perspective, but also allows us to be there with our clients and not scale too quickly to where we're messing up operations and messing up things internally.
$600 to $750 million in lending in a year. What tranche of lending, like in lending in particular for this type of business, right? Because you're not a first-time home buyer lender. This is business lending, right? So like, where would an IFC fall in like the spectrum of lenders across the country, like volume wise, is what I'm trying to understand. Are you guys a boutique lender in Philly, or are you guys considered a bigger size lender because of that business scale?
Yeah, I mean, so we're a bigger size lender, and I think that we're big, but we also know what we do really well, and we know what we don't do well. So some of the things we do well are 1 to 10 unit residential, spec home new construction, townhome development new construction, some of the bigger luxury new construction as well. And then like your typical, right, how we met, which was, the fix and flip, buy and hold type model. And then we do 30-year rental loans. So I think we know what we do well. We know in the space, what sort of things don't have friction or have the least amount of friction. And that's kind of the stuff that we choose to lend on.
What are the stuff that you feel like has friction in the business? I just want to speak on that real quick before we talk about your background.
Yeah. So the stuff that has friction are going to be, the deals where you start to get above 10 units, right? Because these are massive, massive properties with a lot of risk associated to it. Commercial banks that do 25 to 50 to 500 unit apartment buildings. There's a stringent underwriting process with that, and I think there should be, right? Because it's a ton of capital that you're tying up with one borrower and one deal that if that deal goes south, you're in a bad position as a lender. So I think as you scale into the more sophisticated projects, there's friction there, and it's not a bad thing or a good thing. It's just the truth.
Yeah. And you guys as a business, you're hedging your risk on dealing with those kind of deals. Hedging
our risk, and we want as little friction as possible because we want to deliver a smooth process for the people that we do business with. We don't like the loans that take 90 days to close. You know what I mean? We want to be able to turn and burn in sub 30 days. If you have a purchase on a property and it needs to go in 10 days, we want to be able to deliver that to you guys. And as you get into those more complex projects, it's harder to deliver that sort of thing.
That makes sense, especially off market, like the time constraints, as from like a wholesale perspective, you already know.
That's why we exist. I mean, we fall right between like true hard money and banks. So like when you look at true hard money, it's super easy to get capital. It's usually pretty expensive. And most of the guys that are trying to scale can't scale with hard money or private money alone. And when you look at the other side of things with banks, it's like they have all of this capital, right? You have Fannie, you have Freddie, you have the Fed printing shit out of thin air. And then, but with that capital and where those loans get sold to, there's a lot of that friction that we talked about, right? There's tax returns, there's, pay stubs and all of these things that we don't collect. So that's where I think we're uniquely positioned. It's like the best balance of giving you the capital you need to scale, not charging you an arm and a leg, and trying to make the underwriting process as smooth as possible. And it's definitely, it's definitely not a perfect science. We're lending out millions and millions of dollars, so there's going to be some sort of verification.
But jumping from that $150 million increase, it seems like you guys are doing a great job of doing so.
Yeah. Awesome. I mean, I think we have a really good team, and I think that something that IFC does, really, really well is being in lending overall, whether it was traditional or whether it was with IFC for the last, 5-6 years. I see a lot of lending companies that just hire and fire and repeat the cycle over and over and over again. And I think what IFC's done really well has been to genuinely create a culture of people that they invest in. And when your people feel like they're invested in, that gets passed along to your clients. When you feel like management gives a shit about you, that's when you go above and beyond for the people that you're, handling loans for.
How big of a team, Kev?
So we have in our Philly, it's probably 40 to 50 employees.
Okay, that's not bad.
No, I mean, we have, we have our office here for underwriters, processors, account managers, whatever various position. But I think they've always brought people on to the team with the intention of pouring into them and not mass hiring and mass firing, which I think is way too rampant in not only the alternative lending space that we're in, but in the traditional space. I mean, companies do that shit all the time. And it's why, when people don't feel invested in, they don't stay.
Yeah. So how did you find yourself at IFC? I feel like you're when I talk to you about it, more or less, I feel like you're very invested in the company. So how did you find yourself in lending, and then how did you find yourself at IFC?
Yeah, so Kareem mentioned on the intro, I started off as a wholesaler in Philly for two friends of mine. They had just finished their second flip, and they brought me on to run acquisitions for them. And essentially they said, hey, we have these areas in Philly that we want to invest in, and if we can't take on the deal, we're going to wholesale it. And
how long ago did you start wholesaling?
That was in 2017.
Okay.
Yeah, so that was in 2017. Did that for a few years with them, and I actually met one of the owners of iFund Cities, Chris Terrio, who kind of took me under his wing later on, right when I came to IFC. But I wholesaled him a deal. He made a ton of money. We made a ton of money on it, and me and him kind of just kept in contact. So in 2019, I moved out to California. Obviously, the virtual wholesaling wasn't really a thing at the time. I know you're a big virtual wholesaler, but it wasn't really a thing at the time. So me and my buddies from Max Philly kind of parted ways. We had a few deals left in the pipe, and I just fell into lending by accident, man. I wanted to be a commercial real estate agent. Got a job in California. Me and the guy who was the agent didn't get along, and I was looking on Indeed, and I had a dude who was a seasoned vet in the mortgage industry, and he was like, "Hey, man, real estate, obviously sales," because that was all I had done till that point.
Right.
I'm going to come in and take you under my wing and show you the business. So I was super fortunate for that. Me and him are still super close to this day. But I did traditional lending. I got licensed, and then ended up wanting to relocate back to the East Coast where all my family and friends are from. Obviously, I'm from South Jersey. And I reached out to Chris. I was like, hey, what's this lending company that you started, after I left for California? And it was crazy because when I met Chris, he was a developer in Philly. And when I came back from California, he had this lending company that had done over $500 million in originations.
Crazy.
So I linked up with him, and I said, I wanted to walk away from traditional lending because of that friction that I talked about. It felt like it was impossible to be creative, and it felt like there was no common sense after the 08-09 recession because of all the legislature that kind of got in the way. And I think some of that exists for a very good reason. Obviously the banks really messed up, to say the least.
Right. That makes sense.
But it reduced the ability to be creative in the lending space. And Chris called me into his office. I met him and the other two owners of the company, and they said, hey, we feel like you have a real estate background. You have obviously a lending background now. Let us show you kind of what we do here. And it was just, it was apples to oranges, man, as far as the process of getting loans closed, which I was excited about.
So Chris is a developer in Philly. So he's developing in Philly. You meet him through wholesale. Good business is fucking important.
Yeah.
Right?
Yeah.
Because you got to botch that up real quick. You know what I mean?
We could have, man.
Yeah.
Yeah.
So shout out to good business. But he goes from developing in Philly to becoming a lender and doing $500 million. How do you make that jump? How does he make that jump?
Yeah, I mean, I think one of the things that they've always been good at is putting good people around them, and not pretending to know what they don't.
Yeah.
And so there were a lot of things that happened along the way, but I think what's almost more important was the necessity for it. So in Philly, there was really nobody. There was no competition. So like they would go try to get loans for their own projects. And when I say they, it was Chris and Ryan, who's the main owner of iFund. Yeah. There's three owners of the company, but whatever, I digress. So they were trying to get lending for their own projects, and they hated the process.
Yeah.
So they really started it out of it. They're like, wait, can I curse on this show?
Go ahead.
Okay.
Yeah.
So they're going through the process.
We keep it real.
All right. I figured. So they're going through it, the process with these other lenders in Philly, and they're like, what the fuck, man? Like we could do this, but like that classic case of like, fuck this, dude. Like, we could do this better than these guys.
Yeah.
And obviously,
what resistance were they like? You make a jump, you get pressed. In life, you get pressed, and then you make decisions. Like, what was the press for Chris? And it was just Chris that was really getting the.
No, it was Chris and Ryan.
Okay, so Chris and Ryan are developing in Philly. They're not. They're seeing a lot of hurdles, problems. Right. They're not allowing. It's not allowing them to conduct their business. What are the hurdles that they were seeing?
I mean, I think it's some of the stuff that kind of me and you talked about, which is the draw process.
Yeah.
It's like it's taking 2, 3, 4 weeks to get your draw.
Yeah.
It's just like at that time, the system of getting your draws was a technology from the 2000s.
It was a fucking nightmare.
It was a nightmare. Yeah. And it was like you had to wait for the inspectors to go out. You had to do this. You had to do that. And it's like, I think that was a main headache, but it was also like the aspect of closing the loans and, maybe I would say like bullshit conditions from underwriters and I don't think it's the conditions themselves. I think what's super important is when you get conditions for your loans and the person who's writing the loan can't provide context on why you're getting conditioned what you're conditioned.
So it's very frustrating.
It's communication.
It's communication. Yeah. It's like if I tell you that this bank statement doesn't work, but I'm not explaining to you why that bank statement doesn't work, you're super frustrated because you don't know. And like, that's our job as guys in the space. Like, we're the experts at lending. It's our job to educate you guys, not just tell you, hey, here's fucking how it is.
Like spaghetti at the wall.
Yeah, exactly.
So it's not just lending. It was also title for us for a while. I mean, we're good now, but there's a lack of transparency. And when you have a lack of transparency in a high stakes business, whether it's lending or title work or anything, really, you get frustrated people.
Especially with a deadline involved. Every day
counts.
It's
high stakes, dude. Yeah. People want to fund their deals. All right, so I think was there anything else that you feel like was a situation for them that really pushed them to make that jump?
No, I don't think there was anything dire, and again, maybe they could probably speak on this better. Yeah. There's never been anything that's come up in conversations with us where it was like, hey, we got fucked on this $2 million deal or something like that. I think it was just an overall culmination of frustration and just seeing that there was nobody doing it as well as they thought they could, and being high achievers and being in the development base or the development space rather, they were like, fuck it, man. Like, let's just start
there's no national lenders to assist them with ground up construction.
I mean, there might've been at the time, but like the big players in our space, like when you look at private credit, when you look at private debt, it's exploded over the last 10 years. Yeah. So if you go back to 6-7 years ago, it wasn't the same. It wasn't the same.
That's a good point.
Lending in this sphere, not to cut you off, but lending in this sphere is it's grown a lot. This is not the same business as it was in 2008, 2009. Wow. There wasn't this kind of options. There's a lot of creativity. The term that comes to mind when you were talking about their situation is necessity is the mother of invention, right? Mm-hmm. So like they're getting pressed. They're trying to figure out how to get these deals done. And they're probably noticing like, fuck, there's a gap here. There's a big business to be made here in funding these projects because we're doing it the right way and we can't even get our shit done.
They kind of, not to cut you off, harps onto like your motto, made by investors for investors.
Yeah, it wasn't. Yeah. That wasn't just the tagline. Like that was
real.
That was the truth. Like we'll see other people try to somewhat copy it now, but like this was our shit, man. Like we did it and noticed it, and and again, like it's not a perfect science. We're lending out millions of dollars, but like I think intent matters, and the intent and like the ethos of the whole company is like, how do we do right by our guys? Even if it's not a perfect situation, how do we move forward? And that's how I try to position myself, is like when I'm lending to guys is I view myself as a partner, as somebody that's like on your team. It's not you versus me and the underwriters or you versus me and the appraiser. It's like, It's me and you, and how do we go figure out a path forward?
Yeah.
You know what I mean? And I think that it's more of a collaborative effort than it is a combative effort.
So I want you to speak on a little bit more of the capital structure, because I find that fascinating, right? Like, I think when people hear a funding company like this, they assume hard money. It's just a term that's thrown around a lot, but they don't really understand that that's just a word. Like, those are words.
Yeah.
Like, the capital structure that backs the company is the company, because it allows them the flexibility to move money in different ways that another lender may not be able to do it. So just speak on that a little bit. Like, what is iFund City's capital structure and what makes them different to be able to fund deals?
Yeah, absolutely. So I don't want to get too in the weeds, but essentially in any type of lending, traditional, us, otherwise, everybody that's not your handshake guys, like your private money guys that are handing you whatever, 500K or something like that. But anybody that's doing anything at scale, there's these giant hedge funds and there's these giant insurance companies, and they all buy things at different rates, right? In the traditional space, you have Fannie, you have Freddie. In our space, we have, maybe a tier up of that, as far as like the price of the capital, because they're not secured by anything.
Right.
But you have these giant companies that you trade notes to, whether it's 30-year, whether it's short-term notes. And then the other side of that coin is you have the balance sheet structure. So smart companies will raise their own balance sheet capital to allow them the flexibility to do maybe some deals that are what are viewed as these hedge funds as risky.
I see.
Whereas so what we try to do, and you have both sides of the coin. You have these companies that just operate off balance sheet, but they're not huge players because they don't. It's tough to raise a fucking $1 billion in capital. You know what I mean? So
it's knock on a lot of doors.
Yeah, exactly. Yeah. And you have the other side of the coin where you have these lenders that are just masquerading as lenders, and they're really brokers because they're trading everything and they don't have any of the creative control. And so that's kind of where we wanted to be on both sides of it, where it's like, hey, we would like to trade this note because we're trading it to guys that have, billions and billions and billions of assets under management. But if we don't trade the note, our company's not going to go underwater because we have a $200 million balance sheet.
I understand. So you guys you're sourcing your own balance sheet funding.
Yeah.
You're basically knocking on doors and you're saying like, look, this is our rate of return. This is what we're offering. Would you like to invest?
Correct. Yeah. And the most important part of that, and where it gets passed along to the consumer when companies don't have their own balance sheet, is in the draw process. So when companies' draw processes suck, it's fair to assume that
they don't have the funding.
Yeah, or their balance sheet's tight, or you know what I mean? Because here's how it operationally works. I'm gonna lift the curtain for you guys, so we can get.
Listen, that's the point of you being here.
Yeah,
I want you. We want you to lift the current. I think there's a lot of mystery around funding and banking
for sure,
and it's not that mysterious.
Yeah,
you know what I mean. Like people have to understand the way it works. That way they can make good decisions about what lending partners they want. Because if they don't, like, even me, if they don't understand that if this company is having a balance sheet, they're not going to fund those fucking draws correctly. That's going to end up being a problem for a lot of people.
Yeah. And it's not that they're funded incorrectly. It's just that they don't have the creative control. So like I'll start with like how it works with us. So you request a draw from us, even if your note's been traded to one of the giant hedge funds, our draw approvals are done in-house. So say you request 50 grand from us. We'll go through, we'll approve the draw, we'll release the 50 grand to you guys, and then we'll go get the reimbursement from the hedge fund.
From the fund.
Whereas, as you can imagine, if guys aren't that liquid, what's going on?
They're waiting.
They're going to, you put the draw request in, they're going to get the release from their capital partner.
Release. Yeah.
And not only that, is if they're not, if they don't know what the capital partner is willing to release, then you may get a drawback for $30K with no explanation why. At least if you funded a draw through us and we're like, hey man, we can only release $30K, I'm going to call you and give you exactly why.
Yeah.
And that is super frustrating, obviously, but the bigger point of it is the speed. It's like when you got to go and wait for a multi-billion-dollar hedge fund to approve your little draw request.
Yeah.
It's like, it's there's time involved in that.
Yeah.
Whereas we have our draws team in-house, so it's as simple as a conversation with, the two guys that run our draws department as to, hey, can we release this? When can we release it? Why can't we release the full amount? And then at least you guys have some sort of explanation.
You have a way to work around it.
Yeah.
Or you have an understanding of what's going on.
Yeah.
And the inspection process. Talk about that a little bit.
Yeah, so we can go the traditional route. Some guys run massive organizations and they, aren't able to be on site or whatever. So they'll have an inspector come out. And that's your typical turnaround time, right? That's your 1 week to 10-day draw turnaround time. But what we do is we have an app that we upload your budget directly into so you can see it. You can have multiple people log in as users to the app. So even if you can't be on site, but somebody is, your GC's on site.
Right.
Have him take pictures of it.
Yeah.
And you just take pictures while you're on site. It's geotagged.
Yeah.
So you go to the site, you take the pictures, and you submit it to the inspection company. All lenders have inspection companies review, like GCs review the work to make sure.
Yeah.
But then it gets sent right to us, and we can release the draws next day or 2 days later. So our draw process timeline with this new app has been cut from an average draw time of like 3 to 4 days to 24 to 48 hours.
Dude, that's a huge difference.
Technology, baby.
So just to illustrate for everybody how big of a difference is, a difference that is, when you're dealing with subs and GCs and subs or whatever, whoever's working for you on a project, they want to get paid every Friday. Like they need to get paid every Friday. They don't just want to. Like they have people waiting to pay their bills on Fridays. So by you not being able to execute a payout on that Friday, you chip off at that credibility that you have with them. And eventually you frustrate the shit out of them and they go on and they take another job mid-job because they need to cover their people. And then you're put at the bottom of the list. Why? Because you're not going to pay on Friday. So that 4-day thing is a big deal.
Right.
It's a huge deal.
They're going to go to who's paying them.
Right. They're going to
go to who's paying them, and they're going to go who's paying them the quickest. So It is a huge deal.
Question.
Yeah.
Have you had an instance where you've had so many draw requests from clients at the same time that it jammed up your balance sheet? Does that question make sense?
Yeah, it does. Not necessarily the balance sheet. I would say, about a year and a half ago, like we invested a lot into draws. So we brought on more people. We obviously started looking into the new app that we use now to kind of eliminate some of that friction.
Right.
But it's not necessarily, for us, it's not a case of capital.
Okay.
You know what I mean? I think we really, really responsibly manage the capital that we have. And sometimes, that's frustrating for people because that's the difference between us being like, hey, we can't put this on the balance sheet, but like we got to serve our guys who are here first.
Right.
You know what I mean? Like that's just, I think that's a good way to do business. Is like you got to take care of what you have before you start, maybe going out on a limb and doing some other things.
For new investors, like my case right now, I've been wholesaling, we've been flipping contracts, promissory notes, all that good stuff. Now to buy and holds of actually dealing with lenders for the first time. What would your advice be in terms of like what should they have in place? So credit score, obviously a big one. Anything else they should be prepared for, or like when working with you for the first time? Yeah,
for sure. If it's a first time investor, what lenders look at is the chain of title. So if you've been a JV on some deals,
That's a big one.
Or you have the experience wholesaling, it's really tough to prove that.
Right.
You know what I mean? So we will lend to first time investors, but there's really 3 criteria that you're looking for. The first one is going to be your experience, obviously, which, isn't going to be able to be tied out. Second one's going to be credit. Okay. Third one's going to be cash on hand.
Gotcha.
So, you need the compensating factors of the credit and the cash on hand in order to.
And you'll request like channel, like, hey, send me your previous properties.
Yeah. So we'll get an experience form on file. But like, I don't think that should discourage people, dude. Like my advice for first time investors is go partner with guys that have already done it.
Shout out to Mo.
Yeah, shout out to Mo, dude. Like, dude, if you bring Mo a good deal, you think he's going to bitch about?
Oh, we're already doing it.
Yeah.
I don't give a fuck.
Yeah.
Okay.
That's the way to do it, though. Like, I think
I have a rule of thumb in this business. I don't want to count anybody's pockets.
I love that.
I really don't. I want to make money.
Yeah. That's why we're all here.
I feel like counting people's pockets is small time money. Mm-hmm. You know, if you're really doing business and you're doing well with somebody, honestly, I want rich partners. I don't want broke partners.
Right.
Broke partners are a problem. You know what I'm saying? They have a liquidity issue.
Yeah.
I want people with money around me.
Right.
So it's like, that's the best way to do it. But to what he's saying, yeah, absolutely. You get a partner on it, whether it's new construction, by the way, you know, or flip.
Yeah.
Right. Cause like experience in a new construction is not flip experience.
Yeah.
Those are two different things.
Well, you're going to get better terms too by partnering with somebody like Mo. And this might kind of piss a few people off, but like, I think a lot of new investors like to hide under the facade that they're new investors and don't know how to find a deal. So you get a lot of these people that come to these events and they're like, man, I'm trying so hard to get funding. I'm trying, like, dude, if you find a good deal, the other pieces will come into place.
Our first mentor told me that. He said the most important thing is find the deal.
That's why wholesaling's so valuable.
Exactly. Building that
foundation. All you're doing all day. So like, I'm also of the opinion that like 50% of something is better than 100% of nothing.
1,000%.
So go find the deal and bring it to the guys that are doing this shit day in and day out. Get that experience on your resume. Like you don't, like I'm sure you guys are boys, but like you guys don't want to partner on every deal. But if you partner with him for 3 deals, now you have experience.
Right.
Then if there's something that he doesn't want, or if there's something that you're like, hey, I want to try this on my own.
You have flexibility.
You have the flexibility. Now you have the experience. You know what I mean? So I'm a huge proponent of new investors finding a good deal, bringing it to somebody that can execute. And just learn, dude. You don't need to make $100K on your first flip.
Yeah, for sure.
So that's kind of my thought process on
it. And being a direct to buyer with funding is like a cheat code, because this business, it starts with the buy. Like if you buy a product right, if you buy the house right, you can, whatever mistakes you make in the construction process, you can adjust some of those mistakes. Because you've bought the property right. You've bought it deeply discounted.
Right.
You know what I'm saying? If you're buying an on market deal, and then you're first of all, you're not gonna make it work with an on market deal. But if you get a decent deal on an on market deal, right, and you make a couple of mistakes, it's a wash, dude. You know what I mean? But if you've bought it correct, if you own that contract right, it gives you that creative freedom to make better decisions in the future.
Right.
You know what I mean?
Right.
And I think when you have a great lending partner in play, now if you have a great lending partner in play and you have a great wholesale operation in play and you understand construction, like you really get down to the nuts and bolts of it, whether it's new construction or flip, you got a situation.
Yeah.
You know what I mean? Like you got a real situation.
Recipes to cook, man.
Yeah, absolutely.
Love that.
Absolutely. So they have the capital raised. Is what you're that when you first told me that, man, that was like a light bulb for me, right? Because I always assumed there was a third party, there was a secondary market for debt, and all these guys were just brokering debt. That's really what I assumed.
Most are.
Yeah.
It's hard to raise. Think about the environment we've gone through over the last 4 years, dude. Like that's when we've raised most of our capital. It's fucking hard, dude. It's hard. It's been hard to do.
Yeah.
Like now we're going into a situation in 2025 where, stock market's up, all the stuff's up. There's a ton of liquidity in the market. Yeah, people are looking to put their capital to work. That wasn't making lending great.
Yeah.
But this wasn't the case for a majority of, what I'll say, like the last administration. Like people were worried. It was tough to raise capital. And like, that's why it's so much easier to broker debt. than it is to go out and put a whole operation in place to raise capital.
You're taking no risk.
Yeah.
Like you're assigning a note.
Right.
Essentially, you're wholesaling a note. It's basically what the business is.
Crazy.
Right?
Yeah. I mean, the other thing too that I'll say with that, as far as the taking the no risk, like that's why sometimes guys will waive. And when I say guys, I mean people in our space will waive in these deals that don't make any sense. It's just because they have to put somebody else's capital to work. They don't have any skin in the game. So like people will get frustrated with that when maybe we're a little bit more strict on certain things, as far as not just waiving deals in, but like that's also why our capital partners that we do work with love us. It's because we manage risk appropriately. Like you've seen these other lenders that have gone under in our space in the last, I don't want to name them by name, but there's been 3 big ones that have gone under in the last 2 years. That's because they didn't responsibly manage capital. It's because they waved shit in that didn't make any sense. And then eventually their faucet got shut off with the funds that they're selling them to. They don't have a balance sheet. Like
They dried up.
They dried up. And when you raise a balance sheet of capital, it teaches you how to manage the funds.
Yeah.
Right? Because it's your own money. When you've never raised that balance sheet, how could you possibly know how to manage funds responsibly?
Right.
Very interesting. Very, very interesting. Can you take me through your process of new construction versus flip? Because that's a different thing. Your criteria for lending on a new construction project. By the way, the next couple of years for me, that's a new construction wave.
I mean, we love new construction.
New development is where I'm moving. But I mean, not entirely, but more of my work is going to be in that. So I really want to understand your criteria for lending on those kind of deals, the structure on lending them, the draw, like the whole thing. So just take us through that.
Yeah, so they're going to be lower leverage than fix and flip. Like new construction, it just is, right? It's a riskier project. There's more things that can go wrong because you're building the entire house. You know, somebody fucks up the foundation and you've already started to, put the drywall up, you're demoing the house, right? So like we hone in on who is doing the actual build. Like I think that's super important for us. And the only other thing I guess that we do a little bit differently is like because our owners were developers, right? Like they understood the game a lot better than a lot of these other companies. So most of these companies went from fix and flip and now they saw like, hey, new construction's a hot commodity. Everyone's doing it. We have to roll out a product for it. For us, we knew it from the jump. So like
because they were developers.
Because they were developers. So it was like we started off doing mostly new construction.
Wow.
And now flipsy, when you go from new construction to flip, it's a way easier process. It's a much more liquid note if you're trading it somewhere else. Like new construction's still kind of new to these guys. So
can you say that again? You're saying new construction's a more liquid note.
No, I'm saying fix and flip on the secondary market when you have all these hedge funds buying it. They're more familiar with the risks associated. There's more capital allocated to it, which is why leverages are more aggressive for it. It's why pricing's better on fix and flip than it is on new construction.
That makes sense.
And it's why like you see, BlackRock and all these companies coming in and buying 1 to 4 unit properties. It's because there's less unknowns with it. I think we're starting to see new construction kind of move into that like commoditized space. But like it's going to be a process to get there. The way that I view it is like, if you know how to build, new construction is less risky than a fix and flip because you know what's behind the walls. You don't know what's behind the walls of these flips that people are buying. You know what I mean?
And it's easier to create a process for a cut and paste product.
Right.
You know what I'm saying? Producing a product with a plan, with a clear plan of action is super, like it's so much easier than fucking winging it.
You're just starting with dirt.
It's so much easier. Well, in the rehab business, every I'm not talking about like row houses in Philly. Like I'm talking about like South Jersey. There's architectural constraints. Like they're built differently. They're built by different developers at different ages. So when you're taking apart that house in order to rehab it, you don't really know what's behind those walls. Like you have so many hidden surprises, so many unknowns. But when you're doing a new construction, you know like the dirt is the dirt. Like the excavation is the excavation. You know what I'm saying? Like you can create as long as you have a plan, and once you start getting a cookie cutter plan, like we have a friend that does some decent numbers, a mutual friend that does some decent numbers in Philly for new construction. Once you have that plan, you can begin to rinse and repeat. Yeah. And it's really, really hard to do in the flip business. I mean, I know people that are doing a lot of flips, but I feel like new construction is actually easier, to be honest with you.
Yeah, once you get it down. But I think you just kind of said it right there. A key point there is like, you know what you don't know, and that's why you're looking to partner with a mutual partner. Like it goes back to tying it all together to what you said is like, you've done a ton of fix and flips, a ton of fixed to rents. You're still going out there and being like, hey, it might be smart to partner with somebody for these first few to get my bearings under me and make sure that my process is smooth. As far as like our process for new construction though, to answer your original question, is like we're going to be super heavily focused on the liquidity that you have. Yeah. Because you have, in a lot of cases with the new construction, you need to take down the lots, you need to do the permits, you need to do the plans, and then you need to get to foundation. And then that's when you're getting your first draw. So it's like you need to have the capital behind you in order to do all that sort of stuff. Skin in the game. Yeah, exactly. Yeah. So we're going to drill down on liquidity. And one thing that we do a little bit differently, because we were primarily a new construction shop when we first started, is that we will lend to guys that are doing their first new construction project if they've done a bunch of flips. What we'll do is we'll vet out the GC separate from the loan, and we'll do a whole separate GC verification that says like, hey, this guy knows what the fuck he's doing. Yeah. You know what I mean? And that's how we get comfortable with guys that do fix and flips doing the new construction process. We vet out the GC.
That's an interesting caveat. So you want to know who the GC on the project is, because they were developers. You see what I'm saying? Yeah. That little key difference. That's like him being a wholesaler, understanding deals. Right. Like when people are sending him a deal, he understands this is a dog, or there's meat on this bone. Yeah. Because he was a wholesaler, he understands what the amounts need to be, the leverage amounts needs to be. On the same token, that these guys they were developers first, so they know that GC is so crucial in the new construction. That's really the bottleneck. Yeah. In that portion. Very interesting. So there's less leverage in that and on that side of things, more capital requirements on that side of things.
Yeah, absolutely. And I think that's kind of the I think part of that is by design, because these projects do take longer. There's more intricacies to that. Like you just need guys that know what they're doing and know how to manage their own capital. Because if you get guys that start scaling in the new construction business, you give them capital too quickly and they don't know how to manage it. That's where you have these guys that, kind of get wiped out because they've never done new construction before. So, I think that's why the capital is so crucial in that, in the new construction game.
So you want these guys to come in with the land, to do the excavation, to do the foundation. When do the draws start?
Yeah, so your typical new construction project is going to be you take down the dirt, cash, you do your permits and your plans.
Your soft costs.
Yep. And then we come in after permits and plans are approved to do the vertical. Most of the time, depending on the cost of the land, there's going to be no reimbursement for that. Because say you're at 80% leverage on the cost of the land, your soft costs and your budget. Now you're just coming in and you're doing the foundation, and that's really where your first reimbursement is probably going to come from, depending on how. I don't want to get too into the weeds because we don't have no pad or anything like that to run this stuff down. But it is more capitally intensive, obviously, to do all that stuff.
So you're not reimbursing dirt and you're not reimbursing soft costs?
Most of the time we do reimburse, but it's based off of a percentage of it. So like say you're buying land for $100K and your build cost is $400K. We're lending you 80%. Our loan's for $400K. That's what your cost is. You know what I mean? You've already taken down the land cash. So technically it goes into you get credit for it. But when you do the leverage for a new construction, leverage amount. Yeah, exactly. And that's just obviously a random number. But sometimes, dude, you have guys doing luxury lots where they're buying it for $700K and their build cost is 1.3. They are getting a reimbursement for the land because the land cost was so much. So even with the leverage at 80%, they're all in for $2 million. We're lending them 1.6. their budget's 1.3. There's a delta there, right?
Yeah,
Their budget's 1.3. Our loans for 1.6. There's the $300K to cover closing costs, to reimburse for other stuff. So like, yes, you do get reimbursed and you do get credit for it, but the numbers have to pencil what the leverage is on.
Very interesting.
Yeah. So it's a total cost calculation for anybody listening, which essentially means that what you buy the land for, your soft costs, your vertical costs, all of that number gets added together. You take whatever, 75 to 85% of that.
Is that your leverage amount on new construction?
Yeah. Max leverage on new construction is 85%.
85%.
Yep.
For an experienced builder.
For an experienced builder.
What about for an inexperienced builder?
Inexperienced builder or inexperienced flipper that's also trying to do new construction? Like for what you've done, right? Depending on the project, you're probably going to be like an 80% guy, right, from the jump, because you've got the experience. Like if you're somebody who has no flip experience, but you have 800 credit and 500K in the bank,
you're actually riskier.
I don't know if you're riskier, but you're riskier from a leverage perspective, right? Yeah. We're going to give you probably 75% leverage, whereas a lot of lenders would just turn it down. But like, that's where it comes into those compensating factors. Yeah. Is like
a lot will turn it down, huh?
What?
With no experience.
But no experience. New construction is
a disaster.
New construction lending, based on my understanding of it, there's a lot of people that turn it down.
Wow.
Yeah. I've had a lot of lenders flat out say it's not our area.
Shoot.
Yeah. At least they tell you.
Yeah.
And not try to.
I was doing a lot of flip business with them, so they were like, "Listen, we're not the guys." For it.
Yeah. That's what I'm saying. That's smart. I'm glad that they told you that, because a lot of guys would just try to run it down, and then you get super fucking frustrated, and then now you're done.
Yeah.
If a wholesaler brought like a fire land deal to you, would you help him sell that to a guy and then you become the lender on it? Like, have you ever done a collaborative effort like that? Yeah,
for sure. I have a few wholesalers that I work with that send me stuff all the time. But it absolutely, like, dude, people like to, we talked about it earlier about like how much capital is in this base and like how big this business is. It's also like a very small world. Like it is like, and I think that's where some guys get into trouble, is because they will not do right by somebody, and they think that like, oh, it's such a big business. Dude, all the guys at the top fucking know each other. Like it's a very small world for as big of a business as it is. Yeah. You know what I mean? So my point in saying all that is like, I love meeting realtors that know what they're doing, title agents that know what they're doing, appraisers that know what they're doing, wholesalers, like it's all it's all, I think the people at the top collaborate very well.
Dude, we had a deal. I'm not going to name names, but we had a deal. And the guy couldn't get his fucking funding act together. We sold him the deal. We were ready to close. Like the last week of this deal. And it was a banger. We sold the deal. Like it's gone. But the guy just couldn't get his funding situation resolved. So I'm like, fuck it. Let me call Kevin, see if he can do anything about it. We call Kevin, and I start to tell him about the guy. And he shouts out the guy's last name. And then I go, yeah, that's him. He goes, nah, we're not letting that guy.
Wow.
Yeah. It really is a small world.
Yeah. Wow. Yeah. I had the deal I had a deal from him in in processing that we were trying to process for 4 months. It was just sitting there. And I'm like, dude, there's no way we'll take a flyer on this guy for another deal.
It is a small world. It's a big business, but it's a small world. And you run across the same people, like Chris, like his situation with Chris. Like you run across familiar faces, and they remember what the last situation was. Like they make a mental note of how that played out.
We're all human.
Yeah, exactly. I mean, like if the wholesale deal with Chris would have went sideways, do you think he would have brought me on board?
We wouldn't be talking right now.
Yeah, exactly.
Yeah,
I wouldn't be lending right now because I was done with traditional bullshit. So,
that's crazy.
Yeah.
So,
that's awesome.
Anything else you want to say about just IFC in general? For people that are watching right now, a lot of them are new investors. A lot of them are people that are just getting into the space. Anything you want to say to them in particular? And I want you to make sure you let them know where they can find you, how they can get in touch with you if they're looking for.
Talk about your event too.
Yeah.
Yeah, I mean, I think the last thing that I'll say is like, it's not, lending's not a perfect science. Nobody's perfect at it. There's going to be shit that comes up along the way. I think what's most important is that, you're able to have tough conversations quickly. And I think that that's what we do very well with is that. Like, there's to try to act like shit's not going to come up is just, it's a pipe dream. I would love if this job,
yeah,
it was like that.
That's the business, bro.
But that's also where you make your money, man. It's like you make your money in these tough conversations, and I think that's what we do very well. It sounds cliche, but it's like communication is so fucking important.
Sure.
And communication is not just when things are easy to say. That's when it's easy to communicate.
And I feel like you retain credibility that way. Instead of ghosting a situation, like you face it head on. Like, hey, how do we fix this?
Yeah,
and
it goes back to being their partner, man. It's like, hey, it's not me versus you. It's like it's us, dude. Like, how do we come together and figure out any and all solutions for this? And if it's not going to work, then we just need to know it's not going to work. And I'm still going to help you try to figure out how to make it work elsewhere. Right. Because I know that's what's going to keep people coming back in the future. Beautiful. And I just think like on a broader note, man, like it's so tough to find that nowadays. Like I just feel like people aren't built the same, and a lot of people are trying to hide and aren't being transparent. So like I've never felt like it was easier to kind of make a name for yourself in this business because most of your competition isn't wired the same way, isn't built the same way.
Most of your competition isn't built the same way in terms of communicating and being upfront and honest about a situation.
Yeah,
they're hiding behind like a phone call.
Yeah, and I don't think it's malicious, but I think most of the competition like doesn't know we were all raised in front of computer screens. So like, I think most people just genuinely don't know how to communicate.
I agree with you on that.
And so like when it shouldn't be this way, but when I call you guys for a 30-second phone call to go over what we need to figure out with our loans, it's like most people aren't doing that. Yeah. So it doesn't take much to stand out. It doesn't take much to be looked at, as an expert in your profession, So I think that we pick up the phone. I think that when things don't go wrong, we do our best to do right by our guys. And we offer creative solutions for those situations.
Dope. Kev, where can people find you?
So dude, I don't even know what my Instagram handle is. Let me see what it is.
Doesn't IFC also have a podcast? I think what's their podcast? What's IFC's podcast?
So it's not a podcast. We do a capital markets update.
Yeah.
Just kind of a little bit.
That real quick.
We send out, I would say reach out to me and I'll make sure you get on the thing because we don't have like a centralized location for it. And that's a little bit of what we did today is like we're unlifting the veil so that you guys can see what we're seeing, but on a broader scale, like why interest rates are trending up or, whatever might be going on at that certain time. But to find me, it's just, let me pull it up one more time. It's at Kevin_Whistler. I'm sure you'll probably do some tagging.
Yeah, we will. Yeah, we'll tag you.
So yeah, no. But yeah, I would say we're just trying to do right by our guys, man, and help people get the cash they need to do what they got to do.
So for everybody that's watching, having a lender in your pocket, in your backyard, that's local. Kevin is local. He's in the South Jersey market. It's not a likely situation. Like I've dealt with lenders for the last 4 or 5 years. Having a lender come into your office and just sit across from them and communicate with them.
Smoke a cigar with him.
It's not a common thing. So if you guys are interested in doing a project, I want you to reach out to Kevin. Kareem, you have anything to say?
Yes, sir. My advice, man, because I know some new guys are out there too. Get outside. Go out and shake hands and go to these networking events. That's how I met Mohammed. Now I met Kevin. I met my business partner, Phil, here.
Yeah, you got to network.
Get out there,
You got to intentionally network. I think there's people that are professional networkers, but there's no fruit to their labor.
Don't go there to take the Instagram photos.
You're not there for that. You got to shake hands with the right people, but be intentional in the way that you approach things.
Right.
Like if you're at these events and you're not taking any action, you're wasting your time.
Be your authentic self. Like I hear a lot of times like, oh, I'm too new. I feel like it's intimidating. Like just be yourself, man. Like no one was born lending and flipping and wholesaling. Like just go out there, be your authentic self and make a connection.
And nobody knows it all.
Yes.
So when you're at we were at an event the other day for a mutual friend.
That was a good time.
And we were having a conversation with a guy. And the guy just said one thing to me, and I was like, thank you.
That was so funny.
He was like, what do you mean? I'm like, that's why I was here tonight. I appreciate that. Shook his hand and walked away. You know what I mean? And the guy was kind of confused, but laughing. He knew what the fuck I was talking about. And I think he wanted to send me an invoice at some point. But I was like, I didn't give him an address or a phone number or a name. So he doesn't know where to fucking bill me at. But just the fact that I was there, he gave me a perspective that I was not viewing that is important. And I don't, I may have found that a year later. I may have found that a few months later. But I went out to an event, supported a friend, and I was intentional. So I spoke to the right person, and I was able to get a real gem out of that.
Yes.
Yeah.
It's worth it.
I think one more thing on that, dude, like the authenticity is just so important. Like whatever you're doing, and this isn't lending related, but like people are going to try to put you in a box or tell you got to be a certain way or do this certain way. And like, I think that your tribe, the people that gravitate towards you, that all comes from being authentic. Like I think that I'm fortunate at the time in my life where I found IFC, because I think by that point I was truly being authentically me. And I think that's part of the reason that, I've kind of had the success I have.
I love it.
Like, dude, I like to have fun. I like to have a good time. I also like to figure out how the fuck we get deals done.
Right.
Yeah. And that's been my brand, and that's me. You know what I mean?
You can't fake that. Yeah.
You can't fake it, and it's easy to wake up every morning and be yourself, dude. So I think that's huge.
So I just want to say one more thing. When we first sat down, the thing that sold me about dealing with you guys in particular was you said something to me that was interesting. You said, I want to be friends with the people that I work with. I want to smoke cigars and have a good time and have a good conversation and make money with my clients. I don't want other kinds of relationships. I don't want bad relationships. I want relationships like that. And for the record, we got like 3 deals that we're working on together.
Salute.
Yeah.
Nice.
So amazing.
Awesome.
Yeah.
Where can they find you, Mo?
SINAN_EASMAEL on IG.
Some good content coming your way soon, man.
Oh, yeah.
Y'all better tune in, man.
Yeah. They need to tag the subscribe button right there.
Check that out.
Absolutely.
Man.
And comments, guys.
Yes.
Yeah.
Drop it in there. You can find me at KR Direct LLC. I'm always posting new deals for sale, off market, discounted, all that good stuff. Also documenting the journey. I might be 28, man. Documenting my journey of being a younger investor,
007.
wholesaling, 007 out here.
007 on the weekend. 007 on the weekend.
Shout out to James Bond, bro.
Shout out to James Bond.
You can check out my car page at Astro_Reem for people that enjoy cars, because that's part of who I am. So.
Yeah. Thanks for watching.
Thank you.